Hello friends, have you noticed that the International Monetary Fund IMF has reclassified India's currency regime to a crawl-like arrangement? Sounds technical. Let's break it down and see what it means for rupee, gold prices, imports, exports, and inflation. Firstly, let us try to understand what this reclassification means. Earlier, India was under stabilized regime. Now IMF says crawl-like arrangement, a regime where rupee is allowed to slowly adjust, giving controlled flexibility instead of a fixed band. To make it simpler, do you know how the rupee's value is managed? Until now, India was following a system called stabilized, where the rupee moved but the RBI kept it close to a fixed range, like holding a kite with a tight string. But now the IMF says India has moved to a crawl-like arrangement. What does this mean? It's like loosening the string a little. The kite, our rupee, can still fly in the sky, but slowly adjust to the winds. So the rupee won't be fully free, but it can move a bit more based on global trade, dollar demand, gold prices, and the RBI will step in only when needed. Rupee recently saw volatility. Now, why did this change happen? Rupee recently saw volatility, hit record lows, and the RBI has intervened more often. This affects shifting external pressures, global trade disruptions, tariff, forex inflows. One may wonder why IMF does this reclassification and not RBI itself. The answer is that the RBI does not classify India's exchange rate regime. The IMF does. IMF is the global referee for currency regimes. The IMF regularly reviews, classifies how countries manage their currencies. It does this independently based on how a country behaves in reality, not based on what the country says it is doing. These classifications are based on IMF's annual Article 4 consultation reports for each member country. So, RBI cannot label its own regime as floating or crawling, only IMF does. So basically, RBI manages and IMF labels. The RBI's role is to manage India's rupee, intervene when needed, build reserves, control volatility, etc. The IMF's role is to observe and label what that management looks like in practice. Investors view India's openness and transparency. Other central banks interact with the rupee. India is assessed in global currency risk models. Global banks like JP Morgan or MSCI also use IMF's classification when deciding India's index inclusion or currency hedging strategies. Now let's try to understand why this reclassification can be good for India. There will be more flexibility for RBI. Earlier, RBI had to keep the rupee within a tight range, like holding a kite with a short string, as I mentioned earlier. Now, RBI allows it to move gradually based on global pressures, like rising oil prices or falling exports, but can still intervene. For example, if the rupee starts falling sharply due to high oil import bills, RBI won't panic and spend all its dollars to fix it. It will let it adjust slowly, buying time and saving reserves. A slightly weaker rupee makes Indian goods cheaper in global market, helping exporters. Countries like China and Vietnam benefit from such soft devaluation of their currencies. For example, if rupee goes down from 88 to 90 per dollar, Indian textile becomes cheaper in Europe, boosting sale. It avoids artificially strong rupee that hurts domestic manufacturers. It builds credibility with global investors and rating agencies. They see that India is managing its currency strongly, rigidly, and smartly. A weaker rupee makes imports, crude oil, electronics, gold costlier. That can push up inflation, hurting common people. For example, if dollar rises from 88 to say 92 per barrel, petrol in India would cost much more, leading to price rise across the board. If the rupee fluctuates too much, foreign investors may hesitate to invest in India in the bonds and equity sector, fearing currency losses. For example, a US investor who makes 10% profit in Indian stocks may lose if all of its rupee depreciates 10% during the same period. Many media outlets or traders might panic during every small rupee fall. A gradual controlled crawl is not a crash, but it must be clearly communicated to prevent any misinformation and fear. Now, what does it mean for everyday economy? It will give more flexibility and rupee may depreciate or appreciate gradually. Imports of oil and electronics could get costlier, leading to inflation pressure. Exports may gain price competitiveness. Gold and commodities may likely see fluctuations. Gold may benefit if rupee weakens. So, what investors should watch? If rupee volatility increases, forex related assets, gold, import heavy sector may be impacted. Export oriented and dollar earning sector can get a boost. So, this reclassification isn't just a technical label, it affects many aspects inflation, investment, savings, and therefore one must keep an eye on rupee rates and plan their portfolio accordingly. Don't forget to subscribe for more such updates. Thank you very much.